Welcome to RNG Girls, a podcast on the people, projects and politics of renewable natural gas. I'm Lisa Kitt, founder of RNG Girls and managing director of Dahlia Recruitment. Our podcast aims to bring you the latest insights in the RNG market by sitting down with the key players who are shaping the industry, from operators and developers to investors and policy leaders. Joining me as my co-host is the brilliant Skye Austin. She's the sales director for Starktech's RNG and compression division and co-vice chair of American Biogas Council. Together, we'll explore what's being built, what's being funded, and what it really takes to deliver projects in the real world. Please stay tuned for our regular episodes, and let's keep pushing the boundaries of what's possible in renewable natural gas. Welcome back to the RNG Girls podcast, where we explore the people, the projects and ideas shaping the future of biogas and renewable natural gas around the world. I'm Lisa Kitt. I'm the founder of Dahlia Recruitment, where we specialise in connecting top talent globally within the biogas and renewable natural gas industry.
And I'm Skye Austin, Vice Chair of the American Biogas Council and Sales Director with Starktech, where we engineer and fabricate gas upgrading systems that take us from biogas creation and capture all the way to pipeline quality RNG. One of the things I love most about this industry is no matter where you travel, whether it's a dairy farm in Wisconsin, a landfill in Texas, or a biomethane project in Denmark, the challenges are surprisingly similar. How do we create value from waste? How do we reduce emissions? And perhaps more importantly, how do we get projects built?
Today's conversation originated at the Biogas Capital Forum in Copenhagen, which I was lucky enough to attend, and had us looking at one of the most ambitious biomethane growth stories in the world. Europe has a goal of producing 35 billion cubic metres of biomethane. It's an incredible target. But targets don't just build projects. People do. Capital does. Execution does.
And that's what we're here to discuss today, because somewhere between ambition and reality sits the question that every developer has. How do we actually get these projects funded? Before we jump into the biomethane and finance, I'd love for listeners to get to know the people behind our discussion. Jan, Nichlas, and Line. What brought the three of you together, and how did this collaboration begin?
I met a colleague from Line many years ago, and we sort of dropped it as a small idea that we could do this together. I think about 7-8 months ago or so, I got further introduced to Line, and this idea developed, and it really struck, a nice traction. And then Line and I, we worked on it, and initially we had another third party. No offense, Nichlas, but we had another third party involved who was interesting, but nonetheless not exactly a great fit, we felt. Yeah, and then we invited Nichlas, who joined the team, and it was actually very straightforward from there.
Can you tell us a little bit, about your background?
I'm a lawyer here in Denmark. I work for Poul, Schmith, which is one of the larger firms, if not the largest firm in the realm. About 10 years ago, though, I got invited to Denmark as a lawyer for the offshore wind team at Siemens Wind Power, which at that time was booming and growing very fast. And then now so many years later, I think when we're looking at other areas within the energy market, we can see that biogas is definitely up and coming. And I can see some echoes from that, past growth story. And I think it's very exciting to be part of that.
And Line, can you tell us a little bit about your background?
Yes, I'm from the Export and Investment Fund of Denmark. So we are a state-owned fund, but acting as an independent fund with a national promotional bank mandate and an export credit agency mandate. So we can finance Danish companies and projects, and we can finance international buyers of Danish content all over the world. So it means that we can finance projects and companies all over the world. And we also do investments. And as I joined EIFO 10 years ago, actually before it was called EIFO, and that's where I did the first biogas financing together with Nature Energy, now Shell Biogas in Denmark. And that's where I really developed an interest in biogas. It was such an interesting journey. We financed more than 15 biogas plants in Denmark, and we have now broaden our perspective so that we can finance biogas all over the world.
And Nichlas, it always strikes me that no one takes a straight line into the biogas industry. So how did you get here?
I don't think my route was straight line. No, indeed. I've been in the renewable energy industry for the last 9 years. So I have a finance background, and I'm currently working with the Green Giraffe Advisory, which is a global advisory firm specializing in the energy transition. So we do a lot of different things, not only biogas, and that's kind of how I got into, let's say, the renewable world. And biogas, I really got into over the last, let's say, 5 years, where it was a very small part of what we initially did here at Green Giraffe. But over the last 5 years, it's grown to actually a quite important part of what we do. So that's kind of how I got into it. And now with, let's say, everything that's going on in the world, we see that, it will become an even more important part of what we do here at Green Giraffe. So yeah.
Right. Well, thank you for that intro, and it's great to have you guys on our podcast today. So what made this the right moment to launch a conversation around capital? Why now? I'll go to you, Jan.
I think why is it the right time to speak about capital now is because I believe the conviction in the market is growing. I believe that the biogas industry has been around, of course, for much longer, but it's been a bit of sort of a cottage industry across the continent. Like in Germany and France, a farmer who would have his biogas plant and then maybe some sort of an electrification tool to it. And I think now that tipping point from a European policy perspective, but also from sort of an overarching national security, I think of Russia, Ukraine, questions surrounding energy independence and so forth are deeper emerging and continuing. And I think in that context, the biomethane industry is one of the tools, in my view, to go forward to it. So I think why I talk about capital, well, as we need more projects, capital is one of the sort of bottlenecks that need to be resolved, unleashed, to really get the industry to the next level. And that is, I think, why Lina and Nichlas and myself felt that was the right space, the right topic to broach, and to really see if we could contribute to the industry by bringing the right people together and by having that conversation.
Right. What about you, Nichlas?
We have gotten now to a place where the biogas industry really needs to scale. And I think in order to do so, unlocking capital is going to be crucial, both on the debt and the equity side. If you really want to scale the build out of all the biomethane plants over the coming years that we have, or that, let's say, the regulators are pushing us to do. And so that's obviously one of the keys, having the capital to do so. And it's still a new, let's say, asset class for a lot of players, including the banks and the infrastructure funds and basically everybody that brings the money to the table. And therefore, we are all on the journey together, really, to understand and get comfortable with all the different financing risks that are then associated with, let's say, these kind of biomethane assets, which might differ a bit from what we see on other renewable asset classes. So yeah, that's why I think Line, Jan, and myself really wanted to bring together, different stakeholders throughout the value chain, really, to speak together and, discuss and try to figure out what are the bottlenecks and where are the difficult things we need to solve in order to really unlock the capital so we can scale this industry.
Yeah, and maybe I can just add, and I think during the last 10 years, from when I started financing biogas plants, we have really seen this industry develop from farm-based smaller plants, especially in Denmark where we are based, to these large industrialized, large-scale plants, upgrading the biogas to biomethane, injecting to the gas grid, using the CO2, working with the digestate. And so this is, it's so interesting. And there are so many opportunities within this industry. We see CCS projects now in Denmark collecting the biogenic CO2, liquefying it and storing it. And yeah, so it really seems like the right time to focus on this.
From where I sit in the US, it really feels like biomethane is having a moment, not just here, but globally. I know we've touched on some of the reasons, it's kind of unique factors to serve so many different environmental needs and problem solve for so many things, but also from an energy security perspective, it's certainly a valuable tool. Why do you think the industry is attracting so much attention right now?
Well, if I start, maybe I think you hit the nail right on the head there. It's not only about really decarbonizing our energy use, which is very important and which is why what we are trying to do every day here at Green Giraffe, right? But I think there's a second and also very important theme coming in, and that is the energy security. We have so much, let's say, feedstock, so much potential here in Europe, and we need to use that. We need to be able to become more independent from, our neighbors and start producing domestically. And there, biogas just has a huge potential, and it will be silly if we're not looking into utilizing that potential. So that's I think is also one of the points why this is coming up and why it's really let's say being put high on the agenda and high on the priority list of not only the politicians but also let's say the investors, because it's also can, let's say, bring along attractive returns. Yeah.
And we shouldn't forget this is also waste handling, and that's necessary to do as well. And even though I totally agree that energy security that's the highest priority right now, but waste handling and the whole environmental side of it is also a high priority as well.
Yeah, I would also add it's complementary to the sort of electrification piece. Electrification in Europe is not complete, or anywhere else for that matter. And the hard to abate sectors and grid problems with the electrification are there and are real. And I think gas, biomethane actually plays really well in those weaknesses of the electrons, if you like. So it's, I think, a very, very beautifully complementary source of energy to make us fully green.
Yeah, it really is. I mean, Europe's got ambitious biomethane goals at the moment, and there still seems to be a gap between policy and ambition and projects actually reaching financial close. So where do you see the biggest disconnect?
Maybe I can start there. I think when we look at biogas projects and the ability to attract capital, you need to find the right balance between bankability and flexibility. You need to de-risk the projects. And I think that we meet a lot of developers and they think that their project is the best project in the world. And it probably have the potential to be that. But from a financing perspective, we need some certainty. So I think there is a need for the developer, the industry to learn how to speak the same language as the financiers and the investors.
From my side, I think it would be the market. Where do you put it in the pricing? Of course, I'll leave pricing details to Nichlas. That's what he's really good at. But I think from my shop, it's more like the regulatory framework surrounding certification, the guarantees of origin, the certificates needed to be part of the European ETS scheme, and so on. And especially when you do those cross-border exports from one EU country to another. So there's a lot of unclarity in that space, which I think puts a lot of question marks on some of the financial flows in the financial models. But I'll look to Nichlas because he's expert in that.
That's one of the point I had in mind as well. Really, is the, let's say, the harmonization across the different EU markets when it comes to certificates, especially, for example, because that's one of the biggest value drivers in our project, right? We obviously have the gas, but then we have our certificates, our guarantee of origin, which is driving, and underpinning the business case, and really allows us to be able to draw or to raise debts on these projects and to bring a return that is proportionate to the risk that also the investors take. And right now we have the RED III EU directive on a EU level, but then the different individual countries are then transposing that international legislation in a different way. And that really makes the fungibility of the certificates, which is really, the ability to sell the certificates and trade them across different markets, difficult. And that is really what is, I guess, alpha omega for investors and lenders, is having, transparency, having also a stable system that they believe in. And if we one day can sell a certificate in one market and then the other day we cannot sell it in another market, that is really not helping, let's say, the investors really believe in this asset class. Getting that harmonized across the different EU's member state, that is really important. And then maybe just one last thing on that is also, I think the market is just not very mature at this moment. If we look at like wind projects or solar projects, we have power price forecasts where we can, ask maybe 1 or 2 or 3 different providers of power prices to come up with a forecast, and investors and lenders are comfortable, including these in our financial models. But that's really not the case when it comes to certificate pricing. I think that's also one point where we're just very early on in this market, and therefore often we have this discussion on our projects. What should the value of a certificate be today, tomorrow, in 5 years, and 10 years? And that's a thing that is also, let's say, making things a bit complicated when it comes to biomethane.
Yeah, I think in general terms, you can say that we have these long-term assets, very capex intensive, but based on a short-term market. And as a lender that I am, we really like when these two things match. But that said, and you can confirm that, Nichlas, because this is also your area. But I think that we see a very positive trends from many of the banks being able to handle this and to get into this and find some good solutions. So that's very positive.
This conversation seems like really familiar. It's the same one we're having in the US. But I'd love to hear your additional thoughts.
I think it's a good point, Skye, and it's a conversation we have in all markets when there's something innovative or a new technology. Everybody needs to get comfortable with the asset specific or the technology specific risks, and here we just have some things that we are maybe not used to deal with on our offshore wind projects or PV projects, and as I said before, we all on a journey together, learning and becoming comfortable with these risks. And luckily we do see a movement there, and as Line pointed out, I mean, lenders are financing assets, right? So they are getting comfortable with it. But we need obviously to spread and harmonize how we do things across the market, so a lot of other, let's say, banks and other investors can join us and be comfortable as well.
Yeah, and I think you could see that at the event, because a lot of the banks I spoke to there, they were learning, they were listening, they were very intrigued about what is happening. They were not yet fully engaged, like some key players already are, but they were very eager to understand what this really was about and the ups and downs of it. So I think, again, to a timing point, just shows that it was quite a good momentum at the moment.
Yes, and it was so positive to see it. It was an afternoon on a Wednesday in Copenhagen, a small city in the north of Europe. We were able to attract banks from Spain, from France, from Holland, from Germany, from Denmark, of course, and also investors, Lisa from the UK, and also a bank from Poland. So it was very, very positive.
I think we could definitely learn something from what you guys pulled together. It seems to me like from where I sit, it's not that there isn't capital, right? Like there is capital out there, but there seems to be these barriers. And a lot of times I like to call them language barriers, because it's like, I used to be a developer, so this is how my brain works. When I was a developer, like my thought process was, around feedstock agreements and offtake agreements and all of these things. And I had certain expectations, right? But those who are lending into those projects are going to have completely different expectations. And getting that alignment between lenders and financiers and your offtake agreement, even your certificate trading and like how that price volatility looks, or like in the US market, it's D3 RINs and D5 RINs and the LCFS market. Those markets all kind of, they change and they fluctuate, and getting, the finance side as comfortable as the developers are with the changing market is where I see that there's always this bit of a language barrier. From my side, that's kind of what I'm seeing, and really curious, is that what you're seeing on your side too? Is it just kind of aligning that misalignment, slight misalignment? Like people are really excited on every direction, right? But it's figuring out how to put all those pieces together. And like we even look at it in the United States, like how do we trade into the European market? The way that our definitions are for how we account for the renewable natural gas doesn't necessarily fit neatly in with the definitions in Europe, even though fundamentally we're doing the exact same thing.
Well, I totally agree. I don't think that lack of capital is the main barrier, as you said, Skye, in the language, so developers, they need to understand how investors and lenders are thinking, and need to understand how to allocate risk properly and make sure that the risk is well understood. And as a lender, we love when the full cash flow is contracted. But in this industry, we know that this is not possible. And then we need to find the right balance between, I can say it again, bankability and flexibility in this area.
Yeah, and I think to your point on being enthusiastic about investing in and building projects, I think the lenders and banks we're speaking to, they are all very excited, and once we have certain banks that even have allocated pockets of capital that have been said, okay, you need to go out and find projects to finance in the sector, and so the enthusiasm is really there to go and do project and build project and finance them. And the base case for a lender is to get their money back, right? So that's really their base case. So they don't really care too much about the upside, because that's all for the equity party, right? The sponsor. So there again, to Line's point, it's really about striking that balance between, getting the lenders comfortable, getting enough certainty on your feedstock side, on the cost side, get enough certainty on your offtake side, but also acknowledging that we are in a, let's say, nascent industry, and we are not able to contract really the project as we are in, a project financing in offshore wind or a similar sector. So it's really about finding that balance.
Yeah, and I would just want to echo again the constituents, the people we had in the audience. They sort of represented most constituents that you would have in any sort of project, whether it's offshore wind or biogas. But indeed, they were aligned in intent, that they indeed needed to talk to each other, and you could see that within the public. They were in the audience, they were like really engaged and challenged also by the panels, trying to find out like, hey, but I have this question, and now you're talking to this, what do you mean with so and so? So there is, as you described really well, Skye, it's like there is sort of an exploration phase of what things mean and how we structure them, and how do we, maybe to Line's point, how do we understand risks? What does it really all mean technology-wise, but also counterparty risk in all these things? How do we hash it out? And then how do we allocate it? How do we manage it? Do we fork it out to a third party? Do we do it between ourselves, and so forth? So it is a journey of a group of interested and interesting people trying to make it happen.
That's a good point. This is like definitely a journey of people, right? So it would be really, really handy if all of the economics fit so neatly into a spreadsheet, that we could properly define exactly what everything was going to look like. But this industry is made up of so many people, and there's a real human side to the project development, because it takes so many willing parties to actually pull it off. And one thing I've noticed throughout my career is that the RNG projects that fail, it's not because of like a single catastrophic issue. It's more often like 1,000, death by 1,000 cuts, so to speak. Delayed permit, interconnect that takes longer than expected, the feedstock agreements that just can't get finalized, who just can't agree, a policy change, a partner that's moving slower or quicker than expected. And, from your perspective, why is it that really good project concepts still struggled across the finish line?
I think there is not a single answer to that. I think projects get stuck through, as you say, 1,000 different things on 1,000 different times. But there is still a lot of uncertainties and a lot of unknowns in this industry. And this includes, as Nichlas was alluding to, the regulatory framework. What are we actually operating under today? let alone what are we operating under tomorrow and who takes the hit for those of changes. But I can see projects getting stuck for more banal things. They are in a certain municipality, and the municipality is very unsure about having such a plant in their realm, if you like. And they want the consultation questions, and they sort of prolong permitting. So it's also about, like I said, more banal things than just financing, whatever. It's also trying to convince the community and obtain your license to operate, if you like.
I think you said a lot of different partners, Guy, and I think this is also about partnering and partnership. And maybe I shouldn't say this as a lender, but because I hate risk, and as Nichlas said, we only think about downside protection and stuff like that. And we would prefer that the off-taker, as an example, bear all the risk and no clauses that could affect the project. But still, the allocation of risk between all the partners, I think that's very important. And one of the discussions we had at the event, the Biogas Capital Forum, one of the panels that was a case study on how it actually can be done, and it was very interesting. And we had an off-taker with us, and we discussed how to make the PPA more bankable. I think we all need to find a balance and to be partners in this, and that's where people like Jan, lawyers, they really have a role to play to make the right contracts in allocating risk in the right way that all can live with. Does it make sense?
Yeah, absolutely. I mean, I think we often assume that when a project gets announced that construction work is going to start like next week. And as we know, within this world, the projects are used to develop. So how do you keep that momentum going and alive during the process?
Yeah, I think maybe just circling back also on, I don't think we necessarily see that, projects are let's say, not being realized, but it takes longer than maybe what was first anticipated. And that's due to a lot of different reasons. I mean, we've been touching upon permitting. I think that's a good one, and one that I can say that I've probably experienced on 2 or 3 of my projects that was taking longer than anticipated or promised at first. And therefore, basically, things are dragging out. But it's not only about regulatory, let's say, challenges. It's also just about structuring, at least on our side, structuring the deal with the lenders, with the sponsors, coming up with this risk allocation that Lina pointed out earlier. Because there are a lot of new topics that we need to discuss. How do we contract feedstock? Ideally, Lina wants that for 15 years, but that's just not possible in a lot of different markets. And then we have the issue that, feedstocks, development and feedstock costs are not necessarily linked to the offtake price. Mm-hmm. So in the ideal world, we wanted to have a direct, let's say, transfer. If there's any change in feedstock, we also see that in the offtake price. But there's no perfect hedge there that exists. So really structuring it and getting everyone comfortable, I think that's what really takes a long time, and that's why we see maybe projects not being built tomorrow, but the day after tomorrow. So it takes us a bit more time to get to where we need to be in order to put the shovels in the ground. But I think this is something that we would also see speed up as we do more and more projects, as the lenders, as the investors do more projects. The development time and the structuring on the financial side, the financial structuring will also then become shorter, in my opinion.
I think, Skye, maybe to your point very directly, it's like what sustains a project, even if it's, like Nichlas is saying, taking a bit longer than one would have hoped for. If you meet people who run some of these companies and projects, they're like highly passionate. They have a fuel. And I'm not trying to, say the cliche, but they really see this as something that has to happen, and they're very much focused on keeping going. So it is back to, as you alluded to earlier, it's a people thing. You have a group of people who are very passionate and focused on succeeding in this industry. They really believe in the technology. They believe in the good of it, and that, I think, ultimately kind of keeps it going. A highly motivated management team.
Speaking of people, one of the things that really strikes me about all of this, it kind of brings it a little full circle, is that you need so many people to say yes in the project, right? Like the farmer, the utility, the lender, the regulator, the offtaker, the local community, the technology providers. And sometimes it feels like a little bit of a, someone's conducting an orchestra. And where I sit, I would think that the role of the conductor sits somewhere between, the developer and probably a really good attorney. And so I'd love to get, your opinion on who you think takes the lead, pulling all of these pieces together.
It's a good question. I think, again, I hope my perspective is not too narrow, but we need a willingness to pay for these green molecules. And it is more expensive to produce them than the fossil molecules. And how do we get a willingness to pay? I think the first step is ambitious targets, but that's not enough. It can do something, and then it just dribbles down and starts some movement. We just got a new government in Denmark, and you probably already know that, but we have around 40% of the Danish gas consumption that's green gas. And they have a target of 100% in 2030. And they just confirmed that last week. So I think that's a very important and positive ambition.
I just want to riff a bit further on what Lina says, because I think that indeed this sets the frame, if you like, for direction. But then you need entrepreneurial spirit in the project developers, who in my mind are often the node of all these things. They're the ones driving it. The sponsor project developers, depends on how you break that down. But it's them that actually own all these contracts, will have different parties talk to each other, either directly or through them. And it's ultimately them that will start operating the facilities as well, and look further afield to do it again. So I think the main conductor's responsibility, if you like, sits with the project developers. Of course, heavily dependent on the rest of the ecosystem to do their bit. But I think they play probably the key role, incentivized by the things that Lina just described.
Yeah, I also really see the project developer as the main conductor, and really sits with that role. And then I think you could look at maybe likes of Jan and myself as the advisors, as the maybe, I don't know, you could call us the composers, the one actually writing maybe the scripts, the notes. A bit helps, making sure that they think through bankability already when they, go out and talk to the farmers, when they talk to the off-takers, when they talk to the technology providers, and they already start building those things into the contract, so we don't have to come back, at the later point in time and start rip open contracts again, because some banks might not be comfortable with what was already agreed in those contracts. So there we are trying to support really, let's say, the developer in that respect. But really, I guess they are really taking on that full conductor role of bringing everyone together.
Yeah, I think you're right. Just to echo what Nichlas is saying, I think consultants like Nichlas and lawyers as myself are, not to blow my own horn, but we can be very instrumental in not just bringing it together today, but also making sure that down the line things don't act up, and you would have no big surprises that could ultimately still be very cumbersome, or even prevent the project from continuing its operations. So, as you say, Skye, a project developer and a good attorney and a financial advisor and good partners like EIFO is what you need, and you'll get there.
It's the dream team, right?
Exactly.
No, you said it. Access to capital is key, right? Without capital investments, lenders will not get your projects done.
Talking of that, Lina, what's the one misconception that people have about raising capital?
I guess a misconception is that they might have their focus on at another place, instead of focusing on the capital side from the beginning, like Nichlas also said. Do make the contracts in the right way, so you don't have to open them up again. And they see it as a detail. I think it's very important to think of attracting capital, both equity and debt financing, from the beginning when you design your projects. So it's important with again, good partners, good advisors, and good lenders.
In some recent conversations with NRG Advisory, one of the things that we talked about was the fact that projects that attract capital aren't always the most innovative. They're just projects that create the most confidence. And just curious if you agree with that sentiment as well.
Often we say the more boring, the better. Because, what we ultimately want to do is roll out biomethane plants at scale. And you don't do that by financing and building one innovative project after the other. We need to, align and standardize the industry. And to be honest, this technology is not something. It's not rocket science. I hope I don't defend anyone by saying that, right? But it's like it's technology been used for many years, and therefore it's readily available and proven, right? So we know it works, and I think that's really one of the big advantages that biomethane has as well. It's not something new that hasn't been done before. We've done it for many years, and it works. So I think that's really one of the strengths. So for us, in terms of, if we look at the financing side, the more boring it is, the better, really. That being said, we also do want to innovate and evolve the technology. And we do see a lot of innovations going on that can, contribute to us accelerating and being more efficient. So obviously, we're also looking into that. But it's not necessarily bad if it's proven and a bit boring.
Well, Nichlas, I think you're just kind of proving part of the point, right? Like your base case can't be based on innovation, the innovative side. That can be your upside, but like your base case of your project really needs to be based on the tried and true and things that are bankable, right? That we know how these markets and these technologies work.
Yeah. We in EIFO, we are both a national promotional bank and an export credit agency, and always working together with the commercial market. We are not allowed to be there on our own, but we do finance innovative technologies, and we also do investments. We have invested in a Danish demo scale project called Green to X. They are working with producing biogas, biomethane out of straw. So there are opportunities. You just have to look in another direction than these project finance toolboxes. Soft funding or grants could also be an opportunity, together with a portion of some commercial debt, but you need to look in another direction.
Just to challenge the thesis there, Skye, I think it is probably correct that wildly innovative projects are not, really in what Nichlas and Line are looking for. But at the same time, they have to remain competitive. So you have to have innovations, maybe not in the extreme, but definitely in the margin. New projects have to be competitive in that market environment. So maybe more cost effective or higher in yield or what have you. That still makes them attractive. So I would challenge the conversation you had and say, I don't think it kills innovation by any means. I think it just makes it more managed, more in the margin, but still progressing nonetheless. And because it becomes bankable, these technologies actually get deployed and scaled, which makes it even more attractive to continue further in that sort of margin development. So I don't think it fully kills innovation as such, just changes its nature.
Well, you just made my heart very happy as someone who works in the technology field and is working in innovation of project on a daily basis. So it's really great and affirming to hear you say that. But let's just make this practical. Imagine you're a young developer listening to this podcast today, and they're trying to work on their first project. I don't think that there's a better group to give them like a tidbit of information, but what's the best piece of advice that you'd give them before they ever approach a lender or an investor? Jan, you want to start with you, and let's just hear from everyone.
I think get yourself a good team, people you trust within the firm itself, within your company itself, but then also towards looking at your partners. Make sure that you find your good lawyer, your good financial advisor. Yes, I am saying that because we're on the call, of course, but it is very important to get that right, because if you have the right team, it will pay off dividends over the whole lifetime of the project, basically. I think that as a young developer, if you really want to get going and approach banks, that's definitely also what they would look at. What's the expertise, track record? Can we trust these group of people? And then, by the way, also something I've heard many times during the event, during the Biogas Capital Forum, is that investors are looking at, well, we're not, there's a lot of uncertainty, but if we know the people who are doing it, if we know where they're coming from, we can bank, quote unquote, on some of those skills and those experiences and the trustworthiness of the people. So again, people is not the only, but it's one of the key factors I would recommend to get right from day one.
And I think my piece of advice would be not to think of project development and financing as two discrete work streams. Really think bankability from the get-go. Don't develop your project until it's more or less, or shovel ready, and then go talk to lenders or equity providers for that matter. Start thinking that in already from the beginning, as mentioned before as well. So you make sure that that is basically baked into your project development already from the beginning.
Yeah, I totally agree on what both Nichlas and Jan, they said. Approach your bank and investors as early as possible, soft sounding, and then integrate it in your business model and in your project, that you need to be able to attract capital.
I mean, clearly from the conversation we're having in the room, the capital is available, right? But I think the elephant in the room is that every developer I talk to says that it's impossible to find financing. So which is it? And where is that disconnect? I mean, just in, the way that they're structuring projects, or is it something a little bit deeper? Jan, do you want to start?
Sure. I think my takeaway would be that it's the knowns and the unknowns of what these underlying business models really are. There's again the regulatory framework, which is extremely fragmented. It's unsure on which direction it will go to. Nichlas mentioned RED 3, which is a third iteration of a directive here in Europe, but only. So the last time I checked, only one country actually implemented that. All the rest is hopelessly too late and getting slapped on the wrist by the European Commission. So there is all of these underlying unknowns and dynamics that are really influential, not just on a single project, but on the entire industry. And I think if I was an investor, I would have my questions surrounding viability of the project, bankability of the project based from that lens, amongst a few others. So I'm sure Nichlas and Line can speak to some of the other angles.
Yeah. I can just add that be aware that it's difficult to bank on uncertainty. I think that's a short way of putting it.
So where are the financiers still most cautious? Is it feedstock, regulation, execution, technology?
The conversations we have with potential lenders looking at these projects, I think where they're spending most time is really on the feedstock, because regulation is one thing. I think we touched upon that earlier here in the podcast. The technology, it's proven technology, right? So unless you go out and do something completely new, they are also comfortable with that. So really what is different in biomethane and where lenders might be a bit uncomfortable is really on the feedstock side, and getting comfortable with that risk. Is there enough feedstock available? If we can only lock in the feedstock contract for 1, 2, 3, 4, 5 years, how do we then make sure that we have a strategy to roll those over when the time comes? And I think this is where, on the structuring side of the financing is where we spend a lot of time trying to figure out how we can get all parties comfortable with that. So I think that's probably the most important point, or one of the most important points when it comes to the lenders' concerns.
Yeah, I totally agree. And I think in the short term, it might be regulation, but in the longer term, it is feedstock, availability of feedstock. But I think another interesting thing with biogas, biomethane production is that there are so many opportunities. We see projects, they are starting out with producing biomethane, but then they are looking at putting it to SAF production. So this is a building component. So one thing that we are not that afraid of, that's stuck assets, that you can't use the assets for anything else if there isn't a biomethane market. But feedstock, that's really key.
Well, it's interesting that you touched on SAF. One of the things we're constantly talking about in the US is kind of the optionality of the molecule.
Yeah.
So 5 years ago, most projects focused on single markets, typically the LCFS market or the RIN markets. But today, in addition to transportation fuel, we're talking about carbon markets and renewable LNG and marine fuel and sustainable aviation fuel, like you just talked about, and carbon capture and carbon sequestration. So European developers, what is it that they're most excited about? And is this gaining traction and momentum there as well?
I think what we see right now, because I think we see a lot of investor interest for building these biogas platforms. And as an example, Copenhagen Infrastructure Partners, they just launched their second biogas fund. And as I understand, their way of doing it is to create these similar large-scale plants producing biomethane and CO2. And that's a way of creating a predictable asset. But I think in the future, they see a lot of opportunities. And when we look at smaller projects, we see a different way of doing it and different pathways.
What I see with our clients is really, I think one of the points that they're looking into is the liquefaction of CO2. And some markets in the EU are more advanced when it comes to that than others. So in Denmark, for example, we do see projects currently liquefying the CO2, selling it to potential eSAF or PTX plants, so you can use it for something else, for e-fuels. We see it in Denmark recently. There was a CCS tender, so we see some biogas plants actually taking the CO2 and storing it underground. We also recently saw one of the Danish developers entered into let's say an offtake contract with a big tech company also to do the same for a fixed price. So we see a market that is opening up. It's still nascent. So therefore, a lot of our clients in markets outside of Denmark, they are making their projects CO2 or liquefaction ready. So basically thinking it into the project design already from the get-go, making sure that there's room in the design to add a CO2 liquefaction unit somewhere. And then maybe in a year or 2 or 3 or 4 or 5, when the market or the offtake market has matured, they can slap on such a unit to the plant design and start liquefying the CO2, because they've already spent a lot of energy and time on capturing that CO2, right? So it's readily available. So why not do something with it? And so I think that's one of the things, and obviously again also can then underpin the business case even further, making it stronger. So definitely something that our clients are looking into.
And another example is also the e-methane side, where we see it's also early days, but we do see some plants producing e-methane, and some of them partnering with a utility specialized in the green electrons, and then trying to get this going. But again, it is nascent, but I think it demonstrates all the opportunities in this industry.
So we like to do this thing where we kind of ask some rapid fire questions and go around the room. What do you think is the one issue that's holding this sector back the most? Jan, we'll start with you.
I think it's 2 issues. I think it's, first of all, the regulatory framework has to be further expanded and more solidified. It has to be more predictable and create a framework that everybody understands, accepts, and where there is no large shocks or changes anymore. And I think that is currently not fully the case. As Line alluded to earlier, I think it's maybe a short-term problem. It'll be fixed. I have no doubt in it. But it is a very dense and a bit of a moving target in a way. And then I think contractually speaking, contracts is in itself also not rocket science, but it's the right allocation of risk, making sure that all these independent contracts, the offtakes are linked with feedstocks, that everybody understands full project risks and that they are flowing in the right way. I think, of course, people like Nichlas and lawyers like myself, we're doing hard work and already establishing that, but I think more maturity in that space would, I think, help certainty also for financiers to get deeper into the game.
Nichlas?
If I had to pick one thing, I think it would be a lack of harmonization across markets and therefore lack of transparency in terms of, for example, certificates pricing is going. I think that is really one thing that is the root of a lot of conversations that we have with investors and vendors. So I think if we could get a bit more clarity there and get things harmonized, I think that would go a long way.
Line?
Again, I totally agree. But I think I will mention again the feedstock side. One of the reasons why we in Denmark we have been able to build these large scale plants is because of the farmers. They've been very good at collaborating. We have a tradition of cooperatives and, working together, 100 farmers delivering feedstock to a biogas plant. And I do think that we see a growing industry with aggregators or feedstock traders. And I think that's an important part for this industry to take off, because as you also mentioned, Skye, we have a lot of different stakeholders in this area. It's farmers working together with offtakers and developers and engineers. And so I think we like to compare the industry to the wind industry that really has taken off. But this is a bit more complicated because of a lot of different stakeholders being able to work together.
Yeah. So last rapid fire. So is it a capital problem, a policy problem, or an execution problem? We'll go back to you, Jan.
Oh, yeah, there is no single shot answer, I think. I think it's the amalgamation of all these angles that need to just fit right. I go back to Skye, who alluded to a lot of people talking different languages. It's correct. They need to find each other and they need to align. And so it's policy, capital, execution. They all need to line up in the same coherent-ish way. So I think it's an overall system thing, not a single point problem thing.
Mm-hmm. Nichlas?
Yeah, I just echo what Jan says. Really, I don't think we can pinpoint a single issue or problem. Really, it's a combination of all of those, and we need to tackle each one of those to get to where we want to be.
Maybe I can choose execution then as an overall theme, execution on the regulation side and on the capital side and also on the project side. But I totally agree with Nichlas and Jan. It's difficult to choose one, but someone needs to do something. That must be execution.
So if you could kind of look back and forward in time, what's changed most about how investors are looking at biomethane projects today compared to 5 years ago?
Maybe I can start. I can say that the investors are more professional, and we see more institutional investors in this field with a high professionalism and interest in this area. It is really a change from my perspective.
That was that one thing I wanted to say as well is scale. And it's 5 years ago, the plants were smaller. Today, they are still maybe relatively small in terms of the ticket size for some certain investors or some infrastructure investors compared to other big infrastructure projects like, I don't know, a wind farm, for example. The change in who looks into the sector has changed. And we see, as Line mentioned, more professional investors. We see infrastructure funds coming in looking at it. And that is also, due to the fact that now it's bigger projects and they can deploy let's say, the tickets and the capital that they need in order to look at these kind of projects. So that is one of the biggest differences in my eyes.
From my side, I mean, I can only echo my friends here. It's scalability. It's the next big step. We're on the cusp. All arrows are sort of, pointing in the direction, and it's happening. So it's not just wait and see. Yeah. So I just echo my colleagues here.
That's great. Thank you a lot. Before we wrap up, I just want to touch on Biogas Capital Forum from last week. Brilliant event. We'll be releasing some snippets of interviews from the panel. But what's the one hope that you'd hope that attendees took away from that forum last week?
Last week, it was great having everybody in the same room. We talked a lot about standardization, harmonization, how can we look at feedstock security and offtake. And I think there were, it might have come across as there were a lot of things we need to discuss and agree on. But I think that being said, the one thing I really hope that people took away also from the event is that, just look around in a room, we were able to bring more than 100 people together, right? The capital is there. The projects are there, the financing from the lenders, it's all there, right? And they're ready to deploy capital. So I think that's the one thing that I hope that everybody took away, that it's, the capital is there and so the projects just need to follow now. And of course, there's a bit of work to do in terms of standardization, harmonization across the different topics we discussed, but it's all there. And now it's just time to go and execute.
Yeah, I think from my side, and also a small echo to Nichlas, is that you were in a room of friends. Everybody wanted this to happen. There was really a lot of goodwill. And I think, as Nick was also saying, we got together 100 people for a first time event, except for the independent companies. Of course, we have a sort of reputation for this event, which is always a little bit, there are a lot of competing events, if you like, out there, but people chose to come, make time, and even fly all the way up north. And I think that just showcases that people are really willing to move this forward. Whatever your background is, they're really looking into it. So that was my main takeaway, to be honest. I was a believer already, but this sort of gave me a lot of comfort that, this is the right train to be on.
Yeah. Yes, I totally agree. So a lot of opportunities, a lot of hope for the industry.
No, thank you so much for that.
Well, one thing I really love about this conversation is that it reminds us that biomethane isn't a technology challenge anymore. The technology works and the feedstocks exist and the environmental benefits are clear. The question now is whether we can align policy, capital, developers, and markets quickly enough to capture the opportunity that's in front of us, kind of get rid of that language barrier. Because whether you're in Europe or North America or really anywhere around the world, the goal is ultimately the same: to turn waste into value, to create reliable domestic energy, to reduce emissions, and to build projects that matter.
Yeah, that's what this industry is all about.
Thank you for joining us today, and thank you for everyone listening. We'll see you next time on the RNG Girls.
Thank you. Nice being here.
Thanks, everyone.